Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about SoFi Technologies and their SoFi stock price, and Palantir Technologies regarding their PLTR stock price. I'll also be talking about 3 investments that I think are better than SoFi Technologies and Palantir Technologies, so if you want to know what those investments are, make sure to stay all the way to the end of this video. Right now, we're going to be analyzing 3 articles, to where the first one is titled, Investors Heavily Search SoFi Technologies Inc., ticker symbol SOFI. Here is what you need to know. We'll be going over their latest price predictions, price targets, future projections, forecasts, what their upcoming earnings and revenues should be, and how this would positively impact their overall share price, as well as their latest news updates. Then after that, we'll move on to our next topic regarding how SoFi recently launched a new initiative to help employees pay off student loan debt while also saving for retirement, and that's exactly what I want to hear, and this is going to act as a phenomenal news catalyst over at SoFi Technologies, hopefully increasing their share price even more. After that, we'll talk about Palantir Technologies, ticker symbol PLTR, regarding how this is almost a recession-proof company. So we'll be going over their latest news updates, price targets, and price predictions, as well as what I think of this overall company and how high the share price could actually go. Lastly, to round out the video, we will be discussing investments that I think are better than SoFi Technologies and Palantir Technologies, and these investments have allowed me to jump from $2,700 up to $69,600 in just around 2 years. So if you want to stick all the way to the end of the video, feel free to do that. For more videos just like this one on SoFi Technologies, Palantir Technologies, and the best stocks I think that you should buy right now, don't forget to go and annihilate that like button right now, comment your thoughts down below, subscribe if you are new, don't forget to become a member of this channel if you want to support me personally for as little as 99 cents, because that's what keeps me here on YouTube, especially if you want more content just like this one. But with that being said, I say let's jump right into today's stories. SoFi Technologies, as you already know, is a fintech company or a financial technology company that operates as a digital bank. Right now, we're going to be going over their latest projections according to Zacks.com to determine the future of their share price. Over the last month, the company's shares have surged over 58%, which is exactly why I told you all I took profits in the last video. Clearly, I did not liquidate my entire position. However, I did lower my overall exposure to this company so I could take profits. They are up over 58%, while the S&P 500 benchmark is up around 4%, while the industry in which SoFi Technologies is located is up around 13.5%, so I decided to take advantage of this giant uptrend. Currently, SoFi shares are trading at $8.35, while experts believe this company could surge up to or higher than $10 per share, while negative analysts believe this company should only be worth around $2.50, which is very laughable. I have since, like I said, lowered my exposure from 4% down to 3% because I am practicing a proper risk management. Rather than focusing on other statistics and metrics, let's focus on their overall earnings projections. Essentially, we want to see how the company will do in the future. And it's very positive when we have positive earnings projections going into their next earnings report. Currently, SoFi Technologies Incorporated is expected to post a loss of 7 cents per share for the current quarter, representing a year-over-year growth rate of over 40%, which is very positive. Now, the bad part is that over the last 30 days, this would actually represent a decrease of around 11.1% in this overall estimate. Likewise, for the entire fiscal year, the company should bring a loss of 18 cents per share, which would imply a year-over-year change of 55%, which is very positive. Now, the problem is when we get into next year. The next fiscal year, analysts are projecting the company will have a loss of 3 cents per share, indicating a change of over 85%, which is very positive, but some experts believe this company should become profitable by the end of 2023, so really it depends who's right here. If SoFi Technologies ends up not becoming profitable by the end of the year, this could negatively impact their overall share price. However, if it does become profitable, we could see the SoFi share price uptrend even higher in their overall price, above $10 per share. SoFi Technologies is also anticipated to bring in revenues of $472.01 million for the current quarter, which represents a CAGR, or compounding annual growth rate, of over 30%, which is very positive. For the year, they're supposed to bring in around $1.97 billion, and then next year they're supposed to bring in $2.33 billion, representing a 25% and an 18% CAGR respectively in regards to their revenues. Again, these are very high revenue CAGRs, and that's exactly what we want to see, but the main problem here is their overall profitability. Some investors and experts believe this company will not achieve profitability by the end of 2023, while other bullish experts do believe this company could achieve profitability. But in my perspective, if we just look at their history, they have a history of earnings beats and revenue surprises, so essentially I do think they will achieve profitability by the end of this year, especially since the economy is starting to bounce back. And overall, I think things would coast out very nicely, which is why I have not liquidated my entire position. I only liquidated around 1% because since I was profitable, I decided to liquidate some shares just to take some profits off the table. Eventually, after this huge increase, we will anticipate a pullback eventually in the share price, and that's when I will reinvest that 1% profit that I took back when this company is even cheaper. So I'm using my money and my profits to make even more money and profits in SoFi Technologies. It's a very volatile stock, and you can play both the upside and the downside for this company, and I suggest you look into doing so. Next, we'll talk about a very positive news catalyst regarding SoFi Technologies, particularly in regards to their SoFi at Work segment. Right now, a bill is being passed, or at least on the heels of being passed by Congress, and that would be the Secure 2.0 bill. And SoFi Technologies use this as an opportunity to make this an overall catalyst. For instance, SoFi launched a new service to expand access to employer matching contributions by counting student loan payments as elective retirement contributions. Essentially, in a nutshell, and we'll go further into detail, when you are paying off your student loans, you are also simultaneously paying for retirement due to a employer matching contribution, which is a brilliant idea. And that's why SoFi has launched their Student Loan Verification Service, or SLV service. This new addition to SoFi Technologies' portfolio will benefit a plethora of people, and they did this in response to Congress's approval, or on the heels of an approval, for the Securing a Strong Retirement Act, or the Secure 2.0 Act. Like we said, this law will include an important change to retirement law that allows employers to match employees' student loan payments with contributions toward retirement plans as part of an existing benefits program, which is absolutely amazing. This SLV program, specifically from SoFi, will help people in their overall retirement plans, and it will be beneficial for people who have a 401k or a 403b. If you don't already have a 401k set up through your employer, and if your employer offers a match, I would highly encourage you to talk to your HR representative or your human resource business partner to discuss what type of retirement plan your company offers and what they have regards in matching contributions. And this is really good because as student loan payments start back up again, we are going to see a huge flood of people trying to refinance their overall student loans for a cheaper interest rate at SoFi Technologies, increasing their overall revenue, and of course that should also lead to profitability increase, which will increase the overall share price. Again, this is a very positive news catalyst, and they are using what's going on in the macroeconomic economy, such as laws revolving around retirement law. They are using this to their advantage. The vice president of SoFi at Work even commented, and I quote, "At SoFi, we are dedicated to helping people get their money right, and Secure 2.0 and the provision that makes it easier for companies to support all employees' financial well-being is a great example of that." He goes on to say, "Our student loan verification service makes it easy for companies to put this emerging yet highly impactful benefit into action for a more inclusive future." In essence, this is a very positive news catalyst where SoFi Technologies is not only benefiting from the macroeconomic environment and the ending of the student loan moratorium, which is coming up, but also they're using this to help their overall customers. The SLV program will put people leagues ahead regarding their financial future, and that's why I like SoFi Technologies, because they actually want to teach you how to build wealth over the long term. SoFi also has a plethora of other tools, including a debt navigator, refinancing options, and financial education resources that I highly suggest that you utilize. So in the end, these are going to be very positive news updates for SoFi Technologies, thus taking the share price even potentially higher. Now let's jump in and talk about Palantir Technologies and their overall PLTR stock, and how this is a resistant and resilient company to own that's essentially recession-proof, and I'll tell you exactly why I think that is. If you don't know, Palantir Technologies is a big data and analytics company that also specializes in artificial intelligence. They have two main segments. One is their government agency segment, where they sell their technology to government customers, and the other one is their commercial enterprise segment, where they sell to commercial enterprises. Right now, the current share price for the PLTR stock is $15.07, while very bullish analysts believe this company is worth $15, and more negative analysts and bearish analysts believe this company is worth around $5. I also took profits and lowered my allocation to this company from 3% down to 2% because inevitably this company will pull back, and I am waiting for that pullback to reinvest that overall money. But if not, still, I made a lot of good profits from this play. The investment thesis behind Palantir Technologies is that they are very safe, and since the artificial intelligence momentum is building up in this company, it is taking their share price even higher. On top of the overall AI hype, which Palantir is benefiting from, they are also simultaneously scaling their business, creating additional shareholder value, growing their overall profitability, and they are increasing the amount of customers in both their government and commercial segments. Palantir Technologies will also be very useful because we see a de-globalization happening across the world. So what do I mean by that? Globalization is essentially when companies and countries are using each other to make things and or products. For instance, China is very good at manufacturing things very cheap. Therefore, an American company might outsource and use China for their manufacturing, in which China would then send that manufacturing final product back to the United States, and then the United States would use their marketing and sell this to Americans. So they are using and outsourcing certain parts of their business to other countries, particularly to help them in their overall financials. However, we are now seeing a de-globalization where countries are trying to become independent from within so they don't have to rely on other countries. Therefore, other countries wouldn't be allowed to use tariffs or penalize other countries if there is ever political turmoil, which means as de-globalization accelerates, global tensions will also accelerate. However, the good news for Palantir Technologies is that they always focused on supporting the United States first and then our allies, meaning that they are already deglobalized since they are not helping any of our adversaries or other neutral parties. On top of that, we've already seen other companies such as Micron struggling to sell some of its chips over in China because China is also trying to become self-reliant. And even if the overall stock market and investors aren't talking about deglobalization, it's definitely something that you personally need to be aware of. Palantir's position in artificial intelligence also puts this company on a lot of people's radar. So thankfully, their artificial intelligence platform is providing significant growth opportunity for this company during the second half of 2023 and onwards. The company has also made many strategic moves and partnerships to grow their overall revenue CAGR and add additional customers. The total customer count grew by around 41% year over year during Q1 of 2023, and that's exactly what we want to see. On top of that, although their overall revenues were downtrending, as you can see on screen here, Q1 of 2022 was amazing, a CAGR of 31%. It fell down to 26%, then 22%, then 18%. It then held at 18%, and then for Q2, it's anticipated to have a 13% CAGR, but for the full year of 2023, it's actually going to increase back up to 16%, so we are seeing a slight reversal. On top of that, the company is stabilizing, and that's what I want to see. To summarize all of this fundamental jargon, essentially, Palantir as a business is stabilizing, and their revenues are becoming consistent of something that investors can anticipate in the future. Originally, they had very high CAGRs in regards to their overall revenue, which is positive, but lately, their growth has started to fizzle out, and now it's going to be retained and maintained by approximately a 10% CAGR or compounding annual growth rate, which does deliver stability to this overall company. Another thing that I want to say is that their overall markets are very stable. Even if a recession were to occur, their government clients are very unlikely to cut ties with Palantir Technologies because even during a recession, we need to keep our country safe, so it's not like the government is going to stop utilizing Palantir's technology even if the overall stock market and the general economy goes down the drain. Now, I do want to make you aware that Palantir is very overpriced in my opinion. It's a very expensive stock. This author says it's not cheap, and I think that's an understatement. Based off of Palantir's non-GAAP EPS, or non-generally accepted accounting principles earnings per share, is approximately at 45 times, making it relatively pricey and expensive. Nevertheless, it is evident that Palantir is enjoying very integrated partnerships with influential entities throughout the United States and over in the United Kingdom, which is very positive, and this is going to lead to more rapid growth and further networking capabilities over in those segments. So beyond that, I'm not going to be overly harsh regarding this overall stock market valuation of this company, but I do think their valuation is rather high right now, and I personally am waiting for a pullback. When the company ended Q1 of 2023, they ended with their balance sheet filled with $2.9 billion worth of cash and or short-term cash equivalents and no debt, meaning that this company just has a boatload of cash for no real reason, just for overall stability. And this makes this company extremely safe, meaning that they are not at risk of going out of business at all. Picture this company has no debt, meaning that they can use this cash for essentially anything: marketing, research and development, and a lot of other ways. So while Palantir's overall valuation may appear high, the customer growth rates and their overall CAGR is starting to stabilize, meaning that this could be a very good long-term buying opportunity. On top of that, Palantir has been around for many years, and even the author agrees that the price will not stay around $15 per share for a prolonged period of time, and in my opinion, I anticipate a pullback in the overall share price, which will cause the stock to be cheaper, making it a better buying opportunity. The feedback he normally gets from people is, why wait to buy the dip? All that matters is the long-term price target, and let me agree to disagree. Yes, the long-term price target on this company is going to be substantially higher than $15 over the next decade if you are a long-term investor. However, my word of caution to you is, if you could get this company at a cheaper average cost or average cost basis, why wouldn't you? So you make even more profits over the next decade. So that's just something to think about, but overall, Palantir Technologies is doing phenomenal. They are a very recession-resistant company. They have loads of cash on their balance sheet, no debt, they're growing and stabilizing, and they are a profitable company, making this company extremely resilient and safe, and not at risk of going out of business, even if the overall economy goes down the drain. Lastly, let's talk about a few investments that I find more impressive than Palantir Technologies and SoFi Technologies. This has literally allowed me to grow my portfolio by thousands and thousands of dollars over the last 2 years. These investments that I've been investing into are large cap companies, which I have listed and mentioned in previous videos. The large cap companies that I normally gravitate towards would be Alphabet, Amazon, United Health, Berkshire Hathaway, Meta Platforms, Visa, JP Morgan Chase, Johnson & Johnson, McDonald's, Honeywell International, Union Pacific, and many others that I have mentioned. However, what are my core holdings? Those are very good blue chip companies, but what are my core holdings that is giving me the majority of this overall growth? Also, we also did a video where I increased my overall portfolio to this amount, and right now it's approximately at around 80K. But what is causing my overall portfolio to grow so rapidly, even while the overall stock market is being pretty volatile? Well, I'll tell you. By investing in dollar cost averaging into 3 main ETFs that I love, and again, these are not the best things that you can buy, however, they are so good and so resilient and so safe that they are almost guaranteed to build you wealth over the long term, and those ETFs are VTI. This is a very good overall stock market ETF that incorporates the entire stock market, so you get a lot of diversity and safety here. Next up, I have SCHD, and the reason why this is such a good ETF is that it's a dividend passive income ETF, and I always reinvest 100% of my dividends back into SCHD, so my next dividend is even greater. This way, even if the economy crashes, my dividends will be paying for themselves and reinvesting into companies at an extremely cheap rate. Lastly, for growth, we want to do QQQM, meaning we are focusing on information and technology companies with a very low management fee. So literally every single 2 weeks, I invest as much money as I possibly can in terms of discretionary cash and income into these 3 ETFs, on top of my more speculative plays, such as SoFi Technologies, Palantir Technologies, and Tesla, and also on top of my more blue chip safe companies that I'm buying, such as the ones we talked about earlier right here on screen. So these are the types of investments that are actually building my overall wealth. Even though my portfolio has hundreds of overall stocks in them, those make up the majority of my core holdings of my portfolio. You can see on screen over to the left, I have a quick sheet of all of the companies that I have bought. So there are clearly a lot of them, and I reinvest all of the dividends in all of these companies. Essentially, these make up less than 1% of my overall portfolio. The ones that I've previously pointed out make up the majority, and these 3 ETFs that I've just mentioned make up the vast majority, and those are my main holdings. So if you literally want to grow a portfolio from $2,000, like we started with, up to around $80,000, then you would be good to literally listen to this overall perspective, because that's literally all I've done in terms of this overall portfolio growth rate. Now, sadly, we didn't reach $100,000 by the end of the 2-year mark, which I thought we could. However, it looks like it's going to be at the end of the 3-year mark where this portfolio could end up reaching $100,000 in the overall final analysis. But I would love to hear your thoughts down below about your favorite stocks and companies to buy, and tell me about your thoughts on the latest news updates regarding SoFi Technologies and Palantir Technologies. For more videos just like this one, don't forget to go and annihilate that like button right now, comment your thoughts down below, subscribe if you are new, don't forget to become a member of this channel to support me personally so I can bring you videos just like this one, and with that being said, I will see you in the next YT video.